Hello and welcome back to First Place TV. My name is Tumelo Makgakga, a qualified chartered accountant, a registered tax practitioner, and a registered auditor. I am back with another video, ladies and gents, and today I just want to talk basics. I will be talking about basic tax compliance for your business. So if you've registered a business with a CIPC and you're a director or you're a shareholder of such a business, I'll be talking about what are the basic tax returns that you must just watch out for and that you must make sure that you file and submit in order for the company to remain tax compliant all the time. Thank you so much. Please be sure to like, to subscribe, to comment, and to share this video. Yeah, so ladies and gentlemen, from the beginning, when you register your company with the CIPC, one thing that you need to note and to be aware of is the moment your company is registered with the CIPC, and in this case, I'm talking about a private company, that is what is known as a PTY Ltd. When that company is registered with the CIPC, immediately at the same time, simultaneously, it is registered for income tax with SARS. So what that means is you don't have to manually register for income tax after you've registered your company with the CIPC. And if you want to test this, or if you want to see your company registration certificate that you get from the CIPC, it comes with an income tax number. That means that your company is already registered for tax. So that's the first thing that you need to know. The moment your company is registered with the CIPC, then it is automatically registered with SARS for income tax. So that means that automatically, as the director or shareholder, whatever the case might be, you need to be accountable. Just as you are accountable for other things in the business, you also need to be accountable and responsible for the tax affairs of that company. So then it means that you must make sure that all the company tax returns are filed and they are filed on time. So ladies and gentlemen, what does this mean? To be registered for income tax means that you will be liable, or you will need to file two types of returns at a minimum. The first type of tax return is called a provisional tax return. This type of tax return is done every 6 months. So when you register your company, you also choose what will your financial year end be, right? So every 6 months from the beginning of your financial year end, you will have to complete or to file and submit what is known as a provisional tax return. And then again, you need to do a second provisional tax return on the last day of the financial year end of your company. So the first return I'm talking about is what? The provisional tax return. How is this return filed? You file it twice a year. You file it within the first provisional tax is filed within the first 6 months of your financial year, and the second provisional tax is filed on the last day of the financial year. So there are already two types of tax returns that we've identified that you'll need to file and submit when you have registered a company. Now, the third return, or the third type of tax return that you will need to file and submit, is called an annual income tax return. This is now to declare your income for the year and your expenses for the year to SARS, and to also pay what is called your taxable income. There's a systemic way in which these things operate, but for the purpose of this video, I just want to alert you or to make you aware that there are three tax returns that you must be aware of the moment you register a company. That is the first provisional tax, the second provisional tax, and the annual income tax return. The first provisional tax return is filed within 6 months of the beginning of your financial year. So that means that if your financial year is starting in January and ending in December, that means your first provisional tax will have to be done in June. That is within 6 months of the beginning of the financial year. And then the second provisional tax return will have to be done on the last day of the financial year, which means another 6 months needs to pass. So those are provisional tax returns. You file twice in a financial year. Then you will have a final, or the third one, which is called an annual income tax return for that whole year. Those are the three minimum tax returns that you will need to make sure that you file on an annual basis. Now you might be asking yourself, well, I registered my company with the CIPC, but I never really traded. Do I still need to file these returns? Yes, because your company was automatically registered for tax or for income tax when you registered it with the CIPC, automatically you become liable and responsible to file those tax returns that I spoke about. There is a penalty, or there are penalties for non-submission and for not filing these tax returns. So even though your business has not traded, you might find yourself now all of a sudden owing SARS money for failing to submit a specific tax returns. So the answer is, whether or not you have traded, you still have to file these tax returns on an annual basis. So if you have a company which you registered 5 years ago, 6 years ago, and you never really followed up or did anything about it, you must have a look at it. Chances are you have been charged penalties. There's interest on those penalties, and this can lead to very serious consequences. You may have to end up paying this money. So it's important as directors or as shareholders of companies to make sure that as soon as you've registered a company, or you are one of the directors listed in a company that is registered, to make sure that all the tax affairs are taken care of. And like I said, whether or not you traded, there's options for that. There's a way of declaring a tax return for a company that is not traded. So to say we have not traded, that's why we didn't submit the tax return, it's not necessarily an excuse to SARS. So you'll find yourself incurring a lot of penalties and interest for failing to submit these tax returns. So like I said, there are systems and there are methods in how these returns operate, but for the purpose of this video, I have just summarized these 3 tax returns, being your first provisional tax return, your second provisional tax return, and your annual income tax return. At a minimum, you will have to submit these tax returns for your company, or for the company that you have registered. If you need any assistance with all your accounting, tax, audit, payroll, or consulting work, please be sure to reach out to us. You can contact us using the details that are appearing right now on the screen. I look forward to engaging with you and to assisting you and your business to grow and scale and to remain compliant at all times.